And under an extreme bullish environment for XRP, that means alrighty, so in today's video breakdown, we're going to be doing a recap of the month of July's price action. Take a look at what's been causing some of the tailwinds in crypto, tailwind being something that is supportive of riskier assets, just so that way we all understand the landscape. Then we'll take a look at, last week more particular, and then migrate into what to expect moving forward this week. Take a outlook as to the fundamentals that we're going to be mindful of paying attention as we roll over into the last couple of trading days of July. And then after we go over the fundamental landscape, we'll pick apart price action. We'll talk about the if then scenarios, go over if risk on continues, what that could look like in terms of price action on XRP, total cryptocurrency market cap. And then we'll do the inverse, right? So what could weigh on risk sentiment? What things do we need to be mindful of and pay attention to moving forward that could completely change the current narrative, and create a pullback scenario in the total cryptocurrency market cap and assets that we hold in our portfolio? So hopefully after today's video breakdown, you guys understand the landscape. We've been giving you guys thorough updates throughout the entire month of July. If you guys are new to this community, welcome. It's really great to have you guys here. We move very fast paced and we update every single day. So make sure that you guys are watching the Zoom recordings. Make sure that you guys are reading the fundamental reports, keeping update with the Discord. You got Michael here that's constantly dropping fundamentals, myself constantly dropping fundamentals. You got the whole entire CYPRX research team and the research chat literally dropping 50 research articles per day. It's very fast paced, but this crypto ecosystem moves just as fast. And so we're just trying to keep up with the changing tides. It is up to you to just make sure that you guys are updated on those things, okay? Over the weekend, I delivered some homework for you guys. Thank you for those of you individuals who participated. Those of you all who did not, I still encourage you to try out and go do so. I dropped up here in my personal analysis section 3 PDFs that I've written for you guys in the past that are in the Discord. And I encourage you guys over the weekend to pick one of those PDFs and gravitate towards something that the PDF is trying to teach you or show you, and write 3 to 4 sentences on how it could positively affect your life, how you align with it, how maybe you've experienced that before, just how you gravitate towards the education. And so here in the chat, I pinned a couple of the responses so you guys can thoroughly go through and read them. I'm going to do a motivational Zoom call later on this upcoming week and use some of these examples as our talking points to just have a kind of community roundtable. So hopefully more people participate in that homework that I gave out over the weekend, but really great stuff just to see some of the responses that you guys gave, right? So we'll get into that later on this week. Moving on, things have been excessively speeding up in the total cryptocurrency market. And if you've been actively participating in these calls and what's been happening, the updates have been so crazy to keep up with. Trump recently said that crypto has gone up more than any stock. Crypto makes the dollar look good, and crypto is good for the dollar and the nation. So we've never really seen this rhetoric from a politician, let alone a government, or let alone institutions before. I really truly feel like after a few of these headwinds that we're going to talk about today are behind us, we're going to see, after regulatory clarity, a $5 to $6 trillion market cap in crypto come with ease. But the ride to get there is not just going to be straightforward and one up line like all these other influencers make it out to be. So it's important that we understand the landscape, especially if things change intraday, weekly, or on a monthly basis, and how we can readjust our portfolios or allocate capital or just have the proper mentality during those conditions to survive long term. So starting back at the beginning of July and just taking a look back, a recap, this was a Zoom call that we had July 7th, where we did an overall analysis of XRP at the beginning of July, and we talked risk on, risk off scenarios. This was when XRP was trading at like $2.28. And we had called out targets of around $3.39 to $3.82 as our high end targets at that point in time, back at the early stage of July. We have now reached those targets. You guys can now see the kind of realistic expectations that we have here at CYPRX. You had all these influencers calling out $15, $20 price targets on XRP because FedWire is going to go live. We didn't feed into any of that hopium. We stuck to deltas. We stuck to fundamentals. We saw a risk on landscape in July And we saw that price appreciation coexist with that. And so now that we've seen the price action, that stuff is all fine and dandy. But how did we get to this point in time? Why are prices still elevated across the board? Why, if we go take a look at the total cryptocurrency market cap today, it's sitting at 56 plus billion dollars in value gained just intraday, and XRP ETH almost hitting 4 grand, Bitcoin still elevated near all-time highs. Why is this happening? Okay, that's the important part that you understand, because moving forward, if the landscape changes, you can react, or if it continues, you can adapt, right? So that's what I want to cover in today's video breakdown, going over this thoroughly and just building in more realistic expectations. So at the end of this, we'll do an XRP analysis, we'll do a total cryptocurrency market cap outlook, look at some technical, levels to pay attention to, higher levels on XRP that could come into fruition that I firmly believe, if the market sentiment continues risk on, are going to be met. And then also some turnaround levels where, if we see sellers start to show their hand, buyers taking profit, market sentiment sour, levels in which we can anticipate possible pullbacks into. Okay. So let's thoroughly read through this report first, and then we'll jump into the technical analysis. I'll make sure to send this out for you guys later on this afternoon. I just want to make sure that nothing changes, that I have to deliberately adjust. So maybe like 1 p.m., 2 p.m. my time as we roll into Asia session. If nothing has changed drastically, then I'll make sure to send this out so you guys can thoroughly read it and understand it yourselves. Last week, the crypto market experienced a surge of bullish momentum that pushed the total market cap up to 3.86 trillion, a level it continues to hold as of writing. You can see that screenshot. This month's rally so far has been fueled by a combination of dovish Federal Reserve commentary, cooling inflation data, strong earnings from major US companies, hopes for positive trade negotiations, and a lack of new geopolitical escalations. So, in a nutshell, that one sentence alone tells you why we've seen a sustainable risk on rally in July, at least the predominant driving factors. Of course, there's all these little tiny microfibers in between those things, but that is the meat of what we're experiencing and living through in this current landscape. Also, last week, positive regulatory developments in the US added fuel to the fire, signaling growing institutional confidence and policy support for digital assets. We went over that in last week's end of week report. All the bills that were signed and everything that came into fruition surrounding the Genius Act and all those things. Last week was characterized by a consistent risk on environment as the macroeconomic backdrop aligned with investor expectations. Despite a slight uptick in CPI, markets shrugged it off, interpreting it as a temporary result of recent tariff hikes. That is important. Both Fed officials and economic data supported this narrative last week, providing a foundation for continued speculation on rate cuts later this year. The result? Increased appetite for risk assets like crypto and equities. And as always, I just try to provide thorough little tiny snapshots of where I'm getting this data from, making highlights on my fundamental reads for you guys so you can kind of just pick apart the vocabulary I pay attention to. But while the market remains buoyant, only one minor pullback has occurred since the rally began last week, reminding us that volatility never fully disappears in a maturing asset class. And with several critical events and data points still to come this upcoming week, traders and investors must remain alert. We need to understand that sentiment can flip quickly, and our job is to stay prepared, not just optimistic. And so in this little tiny screenshot, I just show you guys that since last week's low, if we come over to the total cryptocurrency market cap, staying on the 12-hour time frame, since last week's low, which was roughly at about 3.59 trillion, we've made a attempt and made a new all-time high in the total cryptocurrency market cap, and sellers have only shown their hands, buyers taking profit one time. Since that pullback in the total cryptocurrency market cap, it was not enough to break previous bullish structure. So the trend still remains skewed to the upside. You can see that it seems, as of time of recording, buyers trying to make another attempt or poke at continuing this overall trajectory to the upside, but we'll see how the landscape unfolds moving forward. So for now, just looking at this immediate price action on a weekly basis, buyers still remain in control. All right. One of the primary pillars supporting the current market valuation is the expectation of Federal Reserve rate cuts. The Fed's dovish pivot, encouraged by softening inflation data and restrained wage growth, continues to fuel investor appetite for risk. This week, the market will be closely watching economic indicators, and more importantly, this is extremely important, the tone of Federal Reserve Chair Jerome Powell during his Tuesday address. Powell's commentary has the potential to make or break a moment for markets. If he reinforces the dovish tone from other Fed officials and acknowledges the need to support the economy amid trade uncertainty, we could see another leg up for crypto. So if he leans more dovish, supporting rate cuts, or the market gets the idea that Trump does not, think that rate cuts aren't going to happen, this could support the risk on environment. Oppositely, and we've seen this before, which is why we need to be mindful. Remember, history sometimes repeats itself. Conversely, if he dials back expectations, similar to his tone during the December 18th, 2024 meeting, if you guys were with us here in this community, we lived through that, where markets could possibly face immediate profit taking and short-term corrections if he leans more hawkish and pushes back on the rate cut trajectory. And just to show you guys what I'm talking about, this is a report from the day after his hawkish comments, which were on a Wednesday. This is the December 19th report, a Thursday, where it says markets sold off on Wednesday, the day before, as the Federal Reserve Chair Jerome Powell explained why the central bank is expecting to cut interest rates at a slower pace than previously expected. Okay. And so the reason why we're being mindful of this is because, again, the current market sentiment is hopeful of rate cuts. It's holding on to the narrative the Fed is going to be at a position later on this year to cut rates. Well, if Jerome Powell comes out and says something that deteriorates that sentiment, it could again lead to some intraday profit taking or possible pullback scenario. And so just to show you guys what I'm talking about, again, historical data is so great to see because albeit it doesn't guarantee anything, it just gives us a better insight into the possibilities that could happen. So that way, if they do, we're not sitting here with our pants down like, oh my gosh, Jerome Powell came out hawkish. What does that mean? I don't know what to do. No, we know that if he comes out hawkish, it will most likely lead to a risk off induced event. And that will allow us to preserve our capital if we choose to do so, or allow us to take advantage of discount opportunities and know why we're taking advantage of them because they're temporary induced pullbacks. Unlike retail traders that become fear induced in those type of environments, we bring education. So here is that event right here. You can see this was Wednesday, December 18th. The market significantly sold off. That was after Jerome Powell's hawkish remarks. And prior to that, during the November election cycle, when, Trump won, if you go back and you look at historical data, the market was aggressively pricing in continued interest rate cuts as we were heading into 2025. All right. Market corrected, and that was a significant sell-off opportunity where, had you known to not be fearful and take advantage of those discounts, looking back now, even though we did experience some major downturns, anybody that was dollar cost averaging in during that fear-induced event or that manipulated event because of fundamentals is now in profit. Okay. So just to show you guys, to continue, let's not forget the importance of last week's University of Michigan survey. It showed consumer sentiment rising to 61.8 in July, which is its highest in 5 months. Inflation expectations also eased, with the 5-year outlook falling to 3.6 from 4%, and the 1-year forecast dropped to 4.4% from 5%. While consumers remain cautious, this data suggests growing confidence in the Fed's ability to control inflation. I'm going to highlight that in bold. That is important. Joanne, the director of the survey, emphasized that consumer confidence hinges on stability in trade policy and a clear downward trend in inflation. If trade negotiations progress and data continues to support the disinflation narrative, markets could maintain or expand their risk on posture. I highlighted that in bold for a reason. But if negotiations sour on the trade front and higher tariffs and retaliatory tariffs are imposed, the market could see this leading to higher inflation, and this could quickly dampen market sentiment. As for the inflation data last week painted a nuanced picture. CPI edged closer to the 3% target, sparking slight concerns at first glance. However, the PPI figure told a different story, suggesting that input costs are declining, which could eventually flow through to consumers. Retail sales beat expectations, but the breakdown suggests that much of the increase came from higher prices due to tariffs, not stronger consumer demand. That is important because it just shows that these spikes in inflation could be induced by tariffs and they could be temporary, which is what the market's holding on to right now. This distinction will be critical for the Fed in upcoming policy meetings. This week, more particular, the US earnings calendar is stacked. Remember, the earnings calendar last week played an important role in the risk on rally. We have major players like Alphabet, Tesla, Verizon, Coca-Cola, T-Mobile, and IBM all set to report. If these companies continue to show strong revenue growth and forward guidance, it will reinforce the narrative of resilience in the US economy and be supportive of risk assets. Inversely, if any of these major, organizations post downbeat earnings and the sentiment starts to deteriorate, that could obviously, of course, have a negative effect intraday on risk assets. And I just include that in because right now we're still in an environment where stocks and crypto, both being risk assets, are still slightly to not, if not heavily correlated. Okay. So that means usually when we see, equities hit new all-time highs, crypto is also rallying. Inversely, when equities are pulling back, we're seeing profit taking or red days on stocks. We usually see that mirrored in risk assets like crypto as well. All right. Maybe there'll be a day in the future where I don't have to put that into the economic report because crypto decouples and just goes on a massive super cycle because it's being used for its utility, but we're not there yet. Okay. On the macro front, we will also be watching. So these are going to be our scheduled data reports. We have flash S&P global PMIs. We have unemployment claims. That's important for the labor market data insights. We have durable goods orders, and we have existing and new home sales. Again, all of these things may seem confusing to you guys, but I give you guys updates and reports all throughout the week so you can thoroughly read them. And eventually you'll come to terms with understanding these reports and how they impact market sentiment. Each of these reports will be dissected for signs of economic strength or fragility that may be influenced for the Fed decision making or that may influence Fed decision making. Again, right now the market is highly sensitive to anything that impacts the timing and magnitude of rate cuts. I highlighted that in bold. On the tariff front, this is going to be our primary reactive headline focus this week. Trade negotiations continue to unfold on multiple fronts. And although we've seen no major breakthroughs yet, there also have not been any escalations keeping investors' hopes alive for a positive resolution. I'm going to highlight that in bold. There's right now a potential deal between the US and Japan remaining intact. US Treasury Secretary Scott Bessent and Japanese Prime Minister Ishiba both expressed optimism last week that a mutually benefited agreement is still within reach. However, no official negotiations as of time of recording took place during Bessent's recent trip. With Japan's upper house elections looming, political instability could derail progress. This is really important, actually, as a matter of fact, and I don't see any other influencer on the internet talking about this event. So, right now, if Ishiba's ruling coalition loses its majority vote, tariff talks could stall or break down entirely, creating an environment of uncertainty. This will be bearish for crypto, or again, create a fear-induced pullback, not bearish overall, like massive freaking 100 billion, whatever correction, but it could be a fear-induced event that creates some profit taking, along with other risk assets, as institutional capital may temporarily rotate into safer vehicles if this event were to incur. Okay. On the flip side, and I'll break this down a little bit further, and I incorporated the report that I got this from. On the flip side, if Ishiba wins the trade negotiations, progress could continue smoothly, and this could significantly reduce uncertainty and act as a tailwind for markets. So here you can see in this report, which is right here. If you guys want to read it, I suggest you do. And it talks about the political vote that's taking place in Japan right now. So it says right here, there were no official tariff talks held between Bessent and Japan, as it was not the main purpose of the visit, Akazawa told reporters on Saturday. Akazawa, who has reached no tangible outcome in tariff talks after 7 trips to Washington since April, is planning to visit the US again as early as next week. So again, why did I highlight that? Because that gives us insights into when to pay attention to these upcoming meetings. They're going to take place this week. That means this week we need to be attentive to these headlines. Voters in Japan are heading to the polls on Sunday, that's today, for a crucial upper house election that could further complicate the progress in tariff negotiations. Opinion and polls suggest Ishiba's ruling coalition may lose its majority in the chamber, which could deal a fatal blow to the Ishiba administration and create political instability in Tokyo. Remember, the markets do not like uncertainty. They don't like political instability at most, right? And so if we see that, that could be an event, a fear-induced event that creates profit taking on riskier assets and demand for safe haven assets temporarily. Now, I'm not saying it's going to be like, oh my gosh, that's it, tops in. No, but understand that if this event takes place and we see a red day and we see headlines that are souring the market mood because of this political instability that could unfold, which will lead to stalled tariff negotiations, which will therefore then lead to a pushback further and uncertainty surrounding tariff talks with Japan. Again, looking at it as a domino effect and doing a forward outlook, it's something that we need to be mindful of. So just thoroughly read through these reports, understand, both sides of the story, what could end up being positive and what could end up being negative for these tariff talks and trade negotiations, along with the political vote that's taking place in Japan. On the EU US front, so these are our two primary jurisdictions to be paying attention to this week. Excuse me, outside of other major jurisdictions like Mexico, Canada, China, and India right now being our headline focus. The European Union is also approaching a key inflection point, with the US President Donald Trump threatening a sweeping 30% tariff on most EU exports by August 1st. Talks have yet to yield a resolution, and while the EU continues to push for exemptions and balanced trade terms, the outlook still remains murky. Should negotiations break down, the EU is prepared and has prepared multiple layers of countermeasures, including tariffs on over $90 billion worth of US goods, potential export controls, and public procurement restrictions. Most notably, there's growing international momentum to activate the Anti-Coercion Instrument, or ACI, given the EU broad retaliatory powers if the US situation escalates. And so here you can see it talks about this retaliatory measure that the EU could inflict if tariff negotiations sour or don't come into fruition or in favor of both jurisdictions, and it would be bad, right? It says right here the ACI would give officials broad powers to take retaliatory actions. Those measures would include new taxes on US tech giants or targeted curbs on US investments in the EU. They could also involve limited access to certain parts of the EU market or restricting US firms from bidding for public contracts in Europe, right? So this would be bad. Okay. This would be horrible if it was announced, and it could be a headwind on risk assets because why? It would most likely create a fear-induced event temporarily. We'd see an environment where demand for safe haven picks up and profit taking on riskier assets unfolds, right? So just be mindful of that. It's not enacted yet. And right now, it's still a possibility, but just something to be mindful of moving forward. So, what would be positive or negative in this scenario? Just so you understand. A positive scenario in terms of the EU US tariff talks would be a compromise deal is reached with a universal tariff closer to 10% with significant exemptions and cooperative digital economic clauses. A negative scenario would be if Trump enacts full tariffs, triggering retaliatory actions by the EU and sparking a full-blown transatlantic trade war. Riskier assets would likely sell off intraday as capital rotates into safe haven assets. So you have the if-then scenarios. You know that if the market is pumping another $100 billion and we see positive headlines that the EU and the United States are high-fiving each other, right? And getting going buddy-buddy with each other, you understand why that sentiment is unfolding. Inversely, if we see 50 billion, $100 billion down for the day, and the freaking EU and Trump are calling each other assholes and that they can't get along with each other, you understand why that is, right? On the Middle East front, right now, markets still remain alert for any sudden escalations in the Middle East or Russia-Ukraine conflict. Of course, any disruptions here can create safe haven demand, boosting gold, bonds, and the US dollar while pressuring crypto and equities. We're still being mindful of that, albeit over the weekend. There have been no relative updates on the Middle East or Russia-Ukraine conflict that are having any market impact from what I'm seeing. So still just something to be mindful of. On the Japanese front, we still have the possibility of the Japanese yen carry trade unfolding. I'm not going to thoroughly read through this. Remember the anticipation that the Bank of Japan could hike rates. If they hike rates more than anticipated or anything like that, we see leading to excessive yen strength could always, you know, create an unwinding of the yen carry trade environment, and that would be bad for risk assets. It's not something that we need to be mindful of in the short term, but still something that we need to keep on our radar as we head into the later half of this year and rolling into 2026. So I'll just continue to keep that in the back of your guys' mind. And then when we need to adjust and talk about it more in detail, we will. So my final thoughts, right? This is important. This is a pivotal week, especially as we head into the last few business trading days of July. While the crypto market remains near highs with only mild pullback so far, the environment is still fluid. Scheduled economic data, Powell's speech, and trade negotiations, along with geopolitical risks, are all potential catalysts that could either extend this bullish momentum or cap it abruptly. If Powell's remarks lean dovish and earnings remain strong this week, expect further upside and risk on flows. Coupled with if trade deals materialize with Japan or the EU, that could supercharge the confidence and riskier assets. However, if we see hawkish Fed rhetoric return this week, trade negotiations stall, or any global tensions escalate, expect a shift pivot from risk off sentiment, right? With that being said, we need to stay agile. We need to stick to the deltas. We need to use pullbacks as opportunities. Again, not financial advice. I know I will be. Remember that pullbacks are not setbacks. When you see $100 billion down for the day and everybody being fearful and the crypto fear and greed index shift from above 70 to down to 50, use that as an opportunity to strategize, not to be fearful. Understand that this ride is not just the destination, right? So these markets, when they finally reach $5 to $6 trillion, those who navigated the volatility with foresight, with discipline, are going to be the ones who endure and prosper. Okay. And so that is us here in this community. That's my wrap up for today. So with that in mind, now you guys have the landscape that we need to see in order to see a sustainable risk on mood. Just taking a look at the total cryptocurrency market cap first, and then rolling over into XRP. And then after we do that, I'll leave the floor open for questions, general comments, and open conversation. All right. So like I said, just taking this week by week, I've mapped out all the weekly lows from July so far. And so right now, if we were to draw out this structure, we can see that starting in July, we created a low of roughly around 3.19 trillion. Higher low, higher high came in next at about 3.27 trillion. Then from this week to the next, we saw a significant jump all the way up, surpassing 3.65 trillion. That weekly low came in at 3.59 trillion, which puts us at where we are today. So we can clearly see that the overall trend during the month of July has been to the upside. So going off of our bullish scenario, that would be the risk on events that could take place this week that would support a more risky environment, continue to support risk assets like stocks and crypto. The two scenarios that I would be paying attention for that to take place this week would be a pullback induced event so that buyers can resituate themselves at previous discounted areas, maybe at last week's low, or maybe a intraday pullback down into the medium point of last week's low. So if we were to, like, say, for example, take a fib and just get some overall percentage levels on this pullback, a 50% correction will be roughly about 3.76 trillion. A 79% correction of this recent weekly low to weekly high would be at about 3.64 trillion, and a full 100% correction before buyers reposition would be a $3.59 trillion market cap. So in a continued bullish environment, meaning the overall trajectory week by week that we've seen in July continues, this will be the first scenario that I would see taking place if we continue to see a risk on environment. A pullback down into last week's low and a continuation move back to the upside, continuing the overall trend. The second thing would be a continuation from where we currently stand after some consolidation, market indecisiveness, finally seeing some type of fundamental that supports continued risk on, a breakout of the recent and most relative high, a retest to confirm support, and a continuation move to the upside. So these will be the two scenarios that I would be looking for that would confirm that we are continuing to the upside. As long as last week's low remains intact and we don't see any fear-induced event breaking previous bullish structure on the weekly time frame. As for XRP, same thing. Looking at last week's low coming in at about $2.80, in a continued and sustainable risk on environment. As long as we hold above the delta at $2.75, I would remain optimistic that a bullish continuation is going to continue for the price of XRP. So same thing as the total cryptocurrency market cap. Intraday, we could see a fear-induced event where sellers could show their hand temporarily, allowing buyers to reposition at discounted levels to take price back to the upside. And that would still be a continuation of the overall weekly trend, as this pullback would still not break last week's low. If we don't see a pullback, we could see a possible retest of $3.25 to see a continuation move to the upside, or we could just see a continuation move where we're currently sitting at, a break of the most relevant sell delta at $3.82, a retest, which would open the door for a continuation move higher if $3.82 is held as support. As of right now, $3.82 is our next sell delta to the upside. If we do overcome that target, the next sell delta above that for our immediate upside targets are $4.44. And under an extreme bullish environment for XRP, that means green light across the board, all rainbow scenario fundamentals come into fruition supporting a risk on move. $5.17 is the highest delta, I believe, as of right now that Scalper has delivered. But we need to break 382 and 444 first. That means if we see some profit taking around these levels, we don't want to see any excessive fundamental shift when price comes into these levels, allowing for buyers to smoothly transition and push through these levels. So that's the upside for this week. The total cryptocurrency market cap, taking a look now at the opposite, the inverse, what to be mindful of moving forward and when to start being cautious. Okay. So right now, our most recent higher low comes in at about 3.8 trillion. We'll just round that off. All right. This is where I would start to be cautious. Right now, you can see, like I said, the last higher low came in at 3.8 trillion. If we start to see buyers make another failed attempt to break above last week's high, and we start to see sellers overpower, and on the lower time frame, we start to see lower lows and lower highs, while at the same time we start seeing the fundamental environment shift, all of those things that I mentioned in the report start to unfold in terms of headlines, and we start to see the market sentiment sour, and that leads to a break in this most recent higher low. That means price action starts to come below $3.8 trillion. That's still going to give you plenty of time to profit take in profit, especially if you were getting down here into these price levels, right, at the beginning of July. But we don't want to pull profit too early just because we see a minor pullback. Okay. So I would wait for a break in the most recent higher low in the total cryptocurrency market cap, coupled with a fear-induced event before I started anticipating that it's time to take profit. We'd like to see a full structure break on the higher time frame, because if we don't, we could see an environment where buyers just come back in, defend at these prices, and this turns into a reaccumulation schematic, right? And then you ended up taking profit too early. All right. So that would be my first level that I'd start paying attention to try to anticipate profit taking in the total cryptocurrency market cap, is a break of the most recent higher low, where buyers are currently making another attempt to overpower sellers. If that turns into a failed attempt and we start to see profit taking below 3.8, that's most likely going to open the door for a deeper correction down towards last week's low, which then again, I would reassess the situation. All right. As for XRP, downside targets, what to be mindful of, what I'm paying attention to. For now, I'm personally not dollar cost averaging into XRP unless we are currently or at buy deltas, right? So I am buying XRP for my DeFi bags, for my DeFi positions. That means XRP that I'm specifically going to be utilizing in DeFi. I have no trade attachment to it or no HODL, put it in cold storage mindset. There's solely going to be XRP units that I utilize in the DeFi ecosystem. So I'm still accumulating those bags, $50 here, $100 there, maybe a couple $1,000s here when prices at buy deltas and when the market is discounted. So I'm still looking for those opportunities. This week, same thing as the total cryptocurrency market cap. Maybe we do see a push higher into these deltas at $3.82, but we see a failed attempt by buyers to continue price action movement above those levels. We start to see sellers showing their hand, and we start to see sentiment sour. The first bearish target on XRP, if we break below $3.25, would be $2.94, what I would be comfortable starting to anticipate some possible allocations to XRP. Anything below $2.94 will open the door for 275, which comes in at last week's low. This will be like the make or break because again, if price could stay above last week's low, even this type of pullback could still lead to a continued bullish rally. Buyers coming in, defending at these prices, and making another higher high, higher low, higher high formation while still maintaining above the weekly lows. So for now, our immediate bearish targets on XRP are $2.94 if market sentiment sours to possibly $2.75 for capital reallocation or repositioning, taking a look at market fundamentals. Is the market going to go lower at that point? We'll get there when we get there. But for now, taking this level by level, right? Or we could make a failed attempt to push into $3.82 and turn around from where we currently stand. But I don't see that type of environment being created right now, at least now as of time of recording. Outside of that, pretty boring when you don't, give outrageous price projections. Again, we take things level by level here at CYPRX. So if during the week any of these levels are met and we need to readjust our strategy, we need to readjust our outlook, we will. But for now, this is where I'm seeing things go. The path of least resistance still remains skewed to the upside as long as we don't see any fundamentals sour the current market sentiment. That is to be the case. Outside of that, that's all I have for you guys in terms of today's video breakdown. Like I said, later on this week, we'll do a psychology call. We'll pick apart some of those responses from this week's homework. I would like it if you guys participated in that in the open forum discussion. That'd be great. Outside of that, I'll see you guys later this week. Let's continue to lock in. Make sure that you guys update your deltas and ask questions as we go along. As always, blessings to you guys. I'll leave the floor open for questions if you have anything.